Hi, let's start with this chapter, Accounts of Companies. And this chapter is the most important chapter from a CA intermediate perspective. Now, the chapter is, sections wise, it's having very limited sections. There are roughly about 11 sections, starting from 128 to 138. But if you look at the marks, now this is the weightage of marks from the past examinations. Like you can see, there are attempts where he is asking even for 10 marks, and otherwise, more or less, the average is always above more than 5. So, and there are very one attempt. This is November 18, where it is asked for 3 marks. Except that November 18, remaining all attempts, the number of marks that are asked are worth noting here. So, on an average, we can conclude this is somewhere around going to be 6 marks. Now, this is from the past examinations, but is it having any impact from the new syllabus? Even if we have a look at the new syllabus, this is what the ICI itself has officially announced. Now this comes under section 3, and this chapter 9, accounts of companies, and 8, 9, 10, 11, all chapters collectively are weighing about 30 to 35%. So from both perspective, the past as well as the future, this is an important chapter that we cannot afford to ignore. Now, let us start with this. Before I start, in this chapter, I would like to give few brief background about this chapter. See, in this, there are various sections, and some of the sections talks about the basic concepts, like what are books of accounts, where do they need to keep, and what is the periodicity with which they should maintain, and what about the revision if they find any mistakes or errors. Is there a scope for revision, or if the authorities find that the accounts that are prepared are incorrect, then can they order for reopening? So those provisions are of one set. Then again, you have two important big dry concepts. One is NFRA and second one is CSR. So those two are generally from student, practically these two are very important chapters, but the students may feel little dry with regard to these two concepts, NFRA and corporate social responsibilities. And the third segment, again, it is something what the students can easily manage with. So which talks about filing of financial statements with the registrar and then internal audit. Now, let's start in order. The first one, section 128. Now, if you look at section 128, under this, the basic provisions of this talks about, as a company, they are supposed to maintain, like how we can make out here, every company shall prepare three things: books of account, books and papers, and financial statements. And these three are required to be maintained for every financial year. Now, if we look at what are these three things, now what is the definition of it? Now I'm not really getting into the subsections and as well, but let us look at it broadly. Otherwise, you do have the subsections here. If we go a little down to here, books of accounts has been defined in section 2, and this books are papers, or books and papers, again, these are all consecutive sections, 212 and 213. Now, more than this, since this is a one-shot revision, let me give you the overview of the chapter, and we will try to cover as many as questions possible from the ICI examination perspective, so that this listening of these concepts along with revision of these questions will help you scoring as much as marks as possible in your examination. Now let's directly look at this definition. Now, why are we learning these definitions? Again, as I said, as we have seen it over here, it is the duty of every company to maintain all these three. One is books of account and books and papers, which is also called books or papers, and third one is financial statement. And when they need to maintain all this for every financial year. So for every financial year, all these three are required to be maintained. Now let us look at each one of it. Books of account. What do you mean by books of account? This books of account talks of four things. One is all sums of money received and expended. Second one, sales and purchases. Third one, assets and liabilities. Fourth one, cost records under section 148. So if you look at it, here we are talking about all sums of money received and expended. This is nothing but your cash and bank book. Plus, you got sales and purchases, assets and liabilities, and cost records. Then, if you look at the second definition, books and papers are books or papers. So, these are basically the supporting documents that we talk about. So based on your books and papers, you are going to prepare your books of account, and based on books of account, you will be preparing financial statements. So though it looks like there are three, but if we analyze it conceptually, they're all interlinked. Again, I repeat. So first, you will all the supporting documents is what you will have, like books of accounts, deeds, vouchers, writings, documents, and minutes. All this will help you maintaining this books of account, which are nothing but your cash and bank book, sales and purchases, assets and liabilities, and various cost records. And the way how you are maintaining these, you would be compiling your financial statements. So these three, in some or other way, they are interlinked. Now, what do we mean by financial statements? Financial statements include all this: balance sheet, P&L account, or if it's a not-for-profit organization, you will have income and expenditure account, and cash flows, and statement of changes in equity wherever it is applicable for Ind AS, etc., and then notes forming part of accounts. So these five are what is included when you use the word financial statement. Now, among these definitions, this books of accounts is something what he may ask you in the examinations, and second one is financial statements. But is it that the company need not maintain this books and papers? The company need to maintain. In fact, in one of these attempts, he had asked, is it mandatory for the company to maintain these vouchers? Yes, vouchers are also need to be maintained, and they are also to be preserved. So whatever the provisions that are applicable for books of account, the same are applicable for books and papers or books or papers, and as well as to the financial statement. When we talk about in terms of the maintenance, where are you going to keep and how long you will have to keep, all provisions are one and same. So this is the basic definition of it. Now, moving further, whatever these three that we are talking about, books of account, books and papers, and financial, they said every company shall maintain. Then is it okay if I maintain the way how I wanted to? No, there is a way how you need to maintain. The way that you are maintaining must represent true and fair view. So a company somehow preparing it is not accepted. The way it is maintained must represent true and fair view. And from the examination perspective, these two are the most important concepts which he is asking. That is, wherever they are maintaining books of accounts, they must be kept based on two things. One is the accrual system, that is the accrual concept, and second one is the double entry bookkeeping. So these two are also the principles which they need to follow whenever they are preparing this books of accounts. Now look at, though that's a very base point, that is something you have studied at your intermediate level, that is the +2 stage, but still there are attempts even when these base questions were asked. Like here in November 2019, Ravi Limited maintained its books of accounts under single entry. So he says they have maintained under single entry. But for a company, under Companies Act, that too under Section 128, it is not allowed for them to maintain single entry. They are supposed to keep it in double entry system. Similarly, they are not supposed to follow cash basis, they are supposed to follow accrual. So the points that we have discussed from examination thus far are, what does this Section 128 talks about? Section 128 says every company must maintain three things. One is books of account, second is books and papers, third one is financial statement. Now, when you say books of account, that include all this, and when you say books and papers, that are all basically the supporting documents like your vouchers, deeds, writings, and other documents, minutes, and etc. And then the financial statement. Now, moving further to it, the definitions which we have already covered. Then we come to this another important topic from examination perspective. That is, where should I keep? Now here he said you must keep, but where should I keep all these books of account? Now that is where this 128.1 subsection 1 talks about, where let us look at the summary. Ideally they are supposed to keep it at the registered office. Now, and this is where they are supposed to keep it, at the registered office. But for any reason, if the company wants to move this books of accounts to any other place, that is still permitted. They can keep it at any such other place, but that must be in India. They can keep it at any such other place, provided there is a board resolution, and that copy of board resolution is filed with ROC within 7 days. So to sum it up, what are the books? What are the three things that the company should maintain? Three things. One is books of account, books and papers, and financial statements. Now, where they should maintain all this? Now, they should keep all of them at the registered office. If that is not practically possible, or for any other business reasons, if the company wishes to move to any other location, that is permitted, provided two things are done. One is there is a board resolution, and such board resolution, a copy of it, is filed with the ROC within 7 days in form AOC 5. Once these are taken care, a company can keep all their books of accounts at any place other than the registered office. Now, look at the question. That is how they are asking. The registered office of Bharat Limited is situated in a classified backward area. So they have the registered office, but it is maybe for their SEZ benefits or XYZ things. They have set up their registered office in the backward area of Maharashtra. The board wants to keep its books of accounts. So we are talking about this books of accounts at its corporate office in Mumbai, and which is conveniently located. The board seeks your advice about the feasibility of maintaining the accounting records at a place other than the registered office. So they do have registered office, but they wish to keep their books of accounts at a place which is other than the registered office. Now they are asking advice. Now, can they keep it? The answer is yes. Then what are the provisions that they need to comply with? They just need to pass one board resolution and file such board resolution, copy of it with the ROC. Timelines are 7 days and in the form AOC 5. Once these are done, a company is allowed to keep their books of accounts at a place other than the registered office. Now, otherwise, this is a simple one which you all must be familiar with, but there is still a point of confusion from the examination perspective. That is, focus here. Here is talking about place of keeping books of account. So all these provisions that we are talking about is for books of account. Now let's look at it. This is also from your other chapter, management and administration. Now in this, where do I keep my registers and returns? Now, particularly, he is asking the questions from members register perspective. Though this provision is for all, section 94 is what we are talking about. Now, why am I bringing this? Please focus here, not to get confused. The chapter that we are discussing starts with 128. So this is not in this chapter. This is in our other chapter. But there is a little small sensitivity that I want you to notice here and be alerted with. Now, in this case, we are talking about books of accounts. But if we talk about registers, then where should I keep my registers and returns, including my members register? I should keep it at my registered office. So that is this registered office, and that registered office is one and same. There's no change. But the problem that comes in is in this perspective. If I want to keep these registers and returns at a place other than registered office, then what shall I do? If you look at this provisions, what they are saying, the company can also keep their books at other than the registered office, but provided more than 1/10 of the total members reside. So they can keep it. Say there are two things. First of all, what you require is a special resolution, and that is special resolution of members. So apart from special resolution of members, then that is putting it in a simple way. With the special resolution of members, can I keep my register at any place other than registered office? The answer is no. The place where you want to keep, such place, more than 1/10 of your total members must be residing. So to sum it up, where should I keep my register and returns? Registers and returns are supposed to be kept at registered office, but can I keep it at any other place other than that? Yes, but you can't keep it at any place of your choice. You must keep it at a place where not, more than or not less than 1/10 of your total members are residing in any city or in a place where minimum 10% of your total members must be residing. Then if more than 10% are residing, can I simply move it? No. Even to keep at this place, you need to have special resolution. So both the conditions are to be satisfied. Now, let us look at the question so that you do understand. This is also your ICI question. This is also your ICI question. This is what I was alerting. So now it is okay. When you study this chapter, you focus from section 94. When you study from this chapter, you focus on 128. But you need to have the maturity to go back and correlate, because he is asking both the questions. At times he is asking, that is why I have underlined here. What they want to keep it at other place, it is the books of account. Now let us look at here. Thus, Techno Limited maintains a register of members. Note it here. He is not talking about books of accounts. He is talking about register of members at its registered office in Mumbai. So they have got their registered office in Mumbai. A group of members residing in Kolkata, say their office is in Mumbai, but a group of members who are residing at Kolkata want to keep the register of members at such place. Now, that is which is other than your registered office. Now, he is asking whether the company can keep the registers and returns at other place other than my registered office. The answer is yes, but you need to write with conditions. The condition number one is more than, that is not less than 1/10 of the total members must be residing in Kolkata, plus there must be a special resolution of members. If these two are done, then the company can keep it. But whereas, look at here, to keep the books of accounts at a place other than registered office, what you require is a board resolution. But here what we are talking about is a members resolution. So there is no match between these two. So in the examination, I request you to focus what is that he want to keep it outside the registered office. Is it register of members or is it books of account? If it is books of account, board resolution is sufficient. If it is register of members, then 1/10 of the total members and special resolution. Both conditions must be satisfied. Now, that is that is what is being talked about in place of keeping books of account. Now a question comes. Now that most of the companies now have become tech savvy and nobody is maintaining any books, most of the companies have become paperless. So in that background, what if a company want to maintain their books of accounts in electronic form? Can they maintain? The answer is yes, they can maintain, but by satisfying these conditions. What are the conditions? Let's take a quick highlights of this. The books must be accessible, and the accessibility of the books must remain in India. That is, the whatever the books that you are maintaining in electronic mode, they must remain accessible in India. And this point I will come back. This is an audit trial. We'll discuss it later. So to repeat it, can I keep my books of account in electronic form? The answer is yes. What is the conditions that I have to ensure? First one is they shall remain accessible in India, and second one, they shall remain complete and unaltered, which is a basic requirement. And the third point, they shall be capable of being displayed in a legible form. So that is normally, since they keep it in electronic form, it may be in the encrypted format and all. So from that background is saying every document must be capable of being displayed in a legible form. And then where can I keep my servers? So what is wherever you are keeping all the backups, here he is talking about backups. Where should be my backup? The backup shall be kept in servers which are physically located in India on a periodic basis. Whenever you are keeping it, this is the point. Where should my backup be? My backup must be in servers which must be located in India. This is the major requirement over here. And then, if at all this point comes in, where the company is taking the help of any service provider for maintaining this books of accounts. In case the company is using any external service providers for maintaining their books of accounts, then the company shall communicate to the ROC on an annual basis the following things. Who is that service provider? What is the name of him? And what are all the IP address of that service provider? Plus the location of the service provider. Where is he? Now, is he a foreigner providing you that services? Like Accenture providing this accounting services for majority of these companies. And In case where the books and accounts are maintained on a cloud, then such address as provided by the service provider. So this becomes important only when the company is taking the help of any service provider for maintaining books of accounts. Then they are supposed to give all these details. So let's move back, get a grip on what we have discussed, and then move forward. See, we started discussing, going back to it, the chapter accounts of companies, which is nothing but chapter 9 of your material. Now, in this, there are 11 sections, which starts from 128 to 138. And 128 and 129, basically, they talk about the types of accounts to be maintained. Now, the types of accounts to be maintained are basically categorized as three: books of accounts, books and papers, and financial statements. The definitions we have discussed. And then we started talking about, though I'm supposed to maintain it, is it okay if I maintain the way I want? No. The way you are maintaining must represent true and fair view. Plus, you must follow these two principles. It must be kept on accrual basis, and you must follow the double entry system as a company. So, what is not permitted is you can't use your cash basis and you can't use your single entry. Then we moved ahead and talked about where should I keep my books of account. Now, my books of account shall be kept at the registered office, but for any operational convenience, if I want to keep at a place other than the registered office, yes, it is permitted. All that I need is a board resolution. Then, where did we talk about this member special resolution and 1/10 of shareholders? That is not for books of account, that is for registers, which is covered in altogether a different section 94. So there two conditions are supposed: the city in which I want to keep, there not less than 1/10 of the total members must be residing, and the members must agree with a special resolution. And both are part of your examination, like I've presented both the questions for to give you that sensitivity. So in the exam, kindly read again, I am alerting, read what you want to keep outside the registered office. Is it books of account? Is it register of members? Accordingly, you are going to talk about it. And then comes the question, can I keep my books in an electronic mode? The answer is yes, but provided these base key points are satisfied. They shall remain accessible in India, they must be complete and unaltered, and they must be capable of being displayed in a legible form, and the backup must be kept in servers which are physically located in India. And the company shall intimate to the registrar on an annual basis, in case, this is applicable in case you are taking the help of any service provider for maintaining books of account. Then who is the third party? What is the name of him? What is the IP address of him? And where is he working from? The location. Or if it is maintained on a cloud, then give the address of the cloud. So these details would become additionally need to be disclosed to the ROC. Now come to take 3 stars to this question. Let's come to this audit trial. Now, take 3 stars to this audit trial. Because this is a new inclusion, therefore, there are chances that he may ask you a question to write. Now, from when this is applicable? Say, this is made applicable from first day of April 23. That is the year in which we are now. So from the April 23 afterwards, and including the year in which we are now, this is mandatory. So audit trail shall be maintained, including edit logs. Now, the background of this is, see, a lot of companies have been altering their accounts, and they were having the habit of entering the transactions with the back date. Of course, the bigger companies and professional companies, they do have soft closures and hard closures, whereby they have their, put them in a student language, they do close their books of accounts on a monthly basis or a quarterly basis, depending on the volume of the company. But otherwise, majority of the companies were passing the entries with back date. So, and they were editing all the transactions, which was becoming a huge problem for the ROC whenever they are conducting investigations. So, to control all those kind of corrections, this point has been brought in. So, now, what does it talk about? It says every company, wherever you are using any accounting software, say this would become a requirement if at all you are using an accounting software for what? For maintaining its books of account. So its applicability starts if the company is using any accounting software Nowadays, almost all the companies uses. Otherwise, the kind of volumes that we are having now, it's impossible without these tools. Now, so wherever the company is using accounting softwares for maintaining their books of accounts, then this section, this rule 3 would come into the picture. So under that, they are supposed to maintain the audit trail. Now, what is the effective date of it? This they have been differing. First it was April 22, and then later on several amendments. Finally, it is resting at first day of April 23. So from here onwards, it is mandatory for every company whichever is using this accounting software to have this audit trail. Now, this trial, they must help it to record or each and every transaction, the trial of each and every transaction. That is what you see it here. So what is that it talk about? What is this feature is about? This feature talks about keeping an audit trial or recording of an audit trial of each and every transaction. And apart from keeping a trial of each and every transaction, it must also create an edit log for every change that is made in the books of account. As I told you, people are passing entries, but subsequently, either the management overriding the controls or the accounting team at the ground level, base level, wherever, so they were making changes. Now, that is where this rule has come in, whereby they are supposed to maintain the edit log. Now, what does that edit log would mean? Edit log would mean who is the making the complete details of it, at what point of time the change has been made, and who is the person who had made the change, and what is the change. So the complete tracker of all the edits will be maintained, shall be maintained by the company. Now, and then can they disable this? Because normally this accounting softwares, they were having it even much before April 23. Even as per their internal controls, part of their internal control, they have provided this, but companies used to disable. That is why now they are saying from this period onwards, the audit trail cannot be disabled. So the way how this software, now key points if you look at it, what do you mean by audit trail and edit log? This is a mandatory requirement. Now, for whom it is mandatory? For those companies who are using accounting software for what? For maintaining its books of account. Then what is that I need to do? So you need to have an audit trail and you need to have an edit log. Now, what is this audit trail is for? Audit trail is for each and every transaction. You must keep an audit trail. So who has initiated the transaction, who has approved the transaction, who has authorized the transaction, who has reviewed the transaction, everything, all complete audit trail of it must be available for each and every transaction. Now, what do we mean by this edit log? Edit log talks about for each change that is made in the books of account, this edit logs must be maintained. So giving the complete details of who are the people who are making these changes. Now, then the third point is the audit trial facility, whatever, the software shall not allow them to disable it. So the three things now. They must have an audit trail of each and every transaction. They must have an edit log. And the third point is such an audit trail, what you are going to keep for each and every transaction, that feature shall not be disabled throughout the year. So throughout the accounting period, that should be enabled so that the government can track it. So these are the requirements of audit trail and edit log. In fact, the ROCs have become a bit serious. They can ask you to submit this edit logs and audit trail wherever there is a need of any investigation. So this is a mandatory requirement, not only from this chapter, even from your audit paper perspective, you will study, because an auditor also had to confirm that the accounting software what the company is using is fulfilling these requirements. So a direct theory question can come out of it, which you have to be cautious. Now, then let's move on to this. Now, these are all the same points, intimation about service provider and all that. Now, let's talk about this one. Now, we said the books of accounts, if we go back where they are supposed to keep it, we said they must keep it at the registered office. Now, what if I'm having branches? Now, where should I keep my books of accounts pertaining to branch? Do I still have to maintain it at my registered office? That is what it talks about. So, what it says is, wherever you have got branches, the books of accounts can be maintained at the branch level. That is permitted. Books can be maintained at the branch level. But the summarized returns from the branch shall be sent to the registered office at frequent intervals. So I explain this. Let's go back here. What is that we are talking about? We are talking about maintaining books of account for branch office, where they should maintain. They can maintain it at the branch. However, a summarized written of the books of accounts shall be sent to the registered office at frequent intervals. So, what is the summary of it? Where are you going to keep this? The books and all. So, the books of accounts of branches, you can maintain it at the branch level. They are not asking you to bring it to registered office, but a summary, the summary for it must be available at the registered office. At what intervals? At the frequent intervals, probably at the quarterly intervals and all, you must maintain it. Now, then, is it allowed for inspection? The answer is yes. The directors have the right to verify all these books of accounts relating to the branches at any point of time. Any time, any day during business hours, they have the right to verify. So the summary again goes back to this. If you are talking about books of accounts, generally they are supposed to maintain at the registered office. But what if I'm having a branch? Then the books of accounts you can maintain it at the branch. There is no issues with that. But the summary must be made available at the registered office at frequent intervals. That is what they talked about. Now, so with this, we have completed this books of accounts at the branch. Now, let's come to this another important topic. Inspection of books of accounts by the directors. This 128.3, again he's been asking questions. Now, what does it say? Inspection of books of accounts. Whatever the books that you are maintaining at the registered office, who has the right to verify? Now, can a director come and verify? Through this section 128.3, the Companies Act gives a director a complete right to inspect this books of account. Now, the same summary of all these paragraphs is talked about. Now, books of accounts, who all can inspect? A director can inspect, or any office agent also can inspect about it. So director or any office representative, typically like chartered accountants or cost accountants or company secretaries or advocates, who are his representatives. Either he himself can come and verify, or he can send any of his representatives for verification of it. This one, this is for, mind you, this is for inspection. So can they come and inspect? Yes, director can do it and agent can do it. Now this, it is not about inspection. They are asking the company to provide information, seeking financial information. Now you are asking the company to provide you the information, what you want. Then who will have this power? Only directors will have the power. That is, the agent who has the right to come and inspect the books, he don't have the power to seek the financial information. But he do have, if we talk about from the director, he has both. He can come and inspect, but he don't have the time and patience, nor the information is too complicated. He can ask the company to provide. Director can do both. Either he can come and inspect, or he can ask the company to provide that information. But when it comes to the agent, agent can inspect, but agent cannot seek, as an outsider, he cannot ask the company for this company's information. So, seeking financial information, agent is not having the power, but director is having it. But when it comes to inspection, both of them can do it. Then comes the question, what about the subsidiaries? Now, can a director verify the books of accounts of that company? The answer is yes. That is what here we talked about. Now, can the director verify the books of the subsidiary? Now, just let us take a small note here so that you understand. Let's say there is an X Limited. Now, in this, there are three directors, X, Y, Z. These people are the directors of this company. Now, let's talk about it. Can X verify the books of accounts of this company? The answer is yes. He can verify. But imagine this company is having another subsidiary. That is, this is the subsidiary and this is the holding. Now our question is, can X go and inspect the books of accounts of this subsidiary? And here he is not a director. If he is a director, then obviously he can do it. But here he is not a director. The directors here are, let's say, ABC are the directors. So this guy is not a director, this person is not a director, but can he still verify because it happens to be subsidiary? Yes, he can verify, but he must have the approval of the board of directors. So once the board of directors approves, then he can go and verify the subsidiary books. But for his own company, he don't require the board approval, he can always come and inspect it. So that is the difference between this inspecting his own company's books of accounts and the subsidiaries. His own company's books of accounts, the answer is yes, but the books of subsidiaries, the answer is still yes, provided you have the approval of the board of directors. So this talks about the completion of inspection of directors. Then comes another point, period for preservation of books, 128.5, how long I should keep this books of account. Now you know that this is a base point, generally 8 years. But when you say 8 years, is it the minimum or maximum? This 8 years is the minimum. More than 8 years is your choice. In fact, there are companies who would prefer to keep this books of accounts for even 15 years, 20 years. They want to have the proof of their legacy accounts. So minimum is 8 years. More than that is the choice of the company. But up till 8 years, you don't have a choice. Company must maintain 8 years. Then comes the question, what if the company has been incorporated for less than 8 years? Then all such years. If you're only a 6-year-old company, then obviously when you have been in existence for 6 years, you can't maintain for 8 years, which is the minimum. So, and since it is minimum, then how will you maintain for 8 years when your aging itself is 6 years? That is why if the company is age is less than 8 years, then they have to maintain for all years. It may be less than 8, but it is fine. All years you have to maintain. Now, then we come to this exception. Now, what is this exception is, in case the central government has ordered for any investigation, then the company is supposed to maintain whatever is the order by the central government for that period. Even if it means longer than 8 years, they are supposed to maintain it. I'll summarize. How long the company should maintain books of accounts? Answer is minimum of 8 years. Then can they keep it for less than 8 years? Yes, provided your age itself is less than 8 years. Then are they required to keep it for more than 8 years? Yes, if there is an investigation ordered by the central government. So that is what is this provisions are for. Now look at how he is asking questions. Let us look at the MCQ. Out of MCQ booklet issued by ICAI. The books of account of every company, together with the vouchers relevant to any entry in such books of accounts, shall be kept in order by the company for a minimum period. So he is asking, what is the minimum period up to which I must maintain the books of accounts? So you know it. So it is 8 financial years immediately preceding the financial year. So 8 years immediately preceding the financial year is what I am supposed to maintain it. Now look at the essay question. State the persons responsible for complying with the provisions regarding maintenance. He is not asking where should I keep and how long should I keep. He is asking who are all the persons responsible. Then we have to look at this next section, 128.6. Now, who are the people who are supposed to maintain these books of accounts? Who are all the people? Managing director, whole-time director finance, and CFO, or any other person who has been given the charge by the board of directors. So, managing director, whole-time director finance, CFO, or any other person, whoever is charged by the board with this responsibility to maintain it. They are the people who are supposed to maintain this books of account. This he is asking. When he asks, it's a direct question. Who are all the people responsible for complying with the provisions regarding maintenance of books of account? You are supposed to write these 4 people: managing director, whole-time director finance, CFO, and any other person who has been delegated by the board with regard to this compliance of this 128. Now, go back and look at it. Then we'll come to penalties. What did we talk about? First, we said what are all the 3 things that are mandatory for a company to maintain. That is where we said the 3 things that we talked about are these. I'll come here, put it for your fresh review. 3 things: books of account, books and papers, financial statements. Now out of these three, which one talks about the backup documents? So the backup documents or the primary documents are your books and papers, which may include deeds, vouchers, writings, and all that. And basis these, you are supposed to maintain your books of accounts. And basis books of accounts, you will compile your financial statements. So these are the three things you are supposed to maintain for every financial year. Now, is it applicable for private company? Is it applicable for government company? The answer is every company is supposed to maintain all these three. Then comes the question. So it is like, what is that I have to maintain? You have to maintain three things: books of account, books and papers, financial statement. Where should I keep all this? You have to keep all of them at your registered office. But I don't have a place at registered office, or that is not convenient. Can I keep it at any other place? Yes, board approval plus ROC's approval. Then comes the question. Now, who can verify this books of accounts? Director can verify, but can he send any his representative like a chartered accountant or a cost accountant? Answer is yes, director or agent. So talking about the agent can come to the company and inspect the books of account, but he cannot write a letter seeking financial information about the company. He don't have that right. Then can a director of holding company, putting it this point in a different way, can the director of a holding company verify the books of its subsidiary? If he is a director in the subsidiary, then nothing much to talk. As he is a director, he will always have the right to inspect. Assuming he is not a director, he is only a director in the holding company, can he still go and inspect the books of the subsidiary? The answer is yes, provided it is a conditional. Whereas this one, it is unconditional, but this is conditional. The condition is the other board member should agree. Then comes the question, how long I should maintain? I should maintain for 8 years. Is 8 years minimum or maximum? It is the minimum years. But is it that minimum? Can I keep it for more than 8 years? Yes, it is my choice. But are there any situations where I am supposed to keep for more than 8 years? Yes, you will have to keep for more than 8 years if any investigation has been ordered by the central government for you. Now, then what if, when we say 8 years is the minimum, what if my incorporation itself is less than 8 years? Then you must keep it for all such years. So this is where and how long I should keep my books of accounts. Then who are the people who are responsible for it? There are four set of people: managing director, full-time director finance, chief financial officer, and any other person to whom the board has delegated this powers under 128. These are the people. What if they fail to maintain this books of account? Then there's whoever is the defaulting officer here, they all will be liable for this punishment. Imprisonment may be 1 year or fine of starting with 50,000, that is not less than 50,000, and which may extend up to 5 lakh rupees. So this would become the penalty for not maintaining this books of accounts, or not maintained this not complied with the provisions of section 128. Now let's move on. What do you mean by financial statement? Now we are stepping into 129. Now, what do I mean by financial statement? Now we have already discussed it above. When I say financial statements, basically we talk of 5 points over here: balance sheet, P&L account, or income and expenditure if it is a not-for-profit organization, and then cash flows and statement of changes in equity, if applicable, like NDAs and etc., and notes to accounts, notes forming part of accounts. So these 5 are included when I use the word financial statements. Now, then is it mandatory for every company to prepare financial? Yes, under section 128, it is mandatory for every company to maintain financial statements. Now, but this cash flows, whatever we are talking about, balance sheet is fine, P&L is fine, but this cash flows may not be required for these companies: OPCs, small companies, dormant companies, and certain private companies like startup companies. They need not have cash flows. So it is still okay if they are not maintaining these cash flows. Then how they should keep their the financial statement? What is the manner in which they have to prepare? They have to prepare in the manner of Schedule 3. This point we will come back. We will talk about it later. Now, then comes this financial year. Now, when you said every company has to maintain all these three documents for every financial year. What do I mean by financial year? How do I determine? So, the summary, let us look at it. What do I mean by financial year? For company or body corporates, which are generally, it is like 31st day of March every year. See, before this, I mean, of course, a few years ago, the companies used to close their books of accounts at their choice. Some companies used to follow this April to March. Some companies were following June to July. So it was almost the choice of the companies. So they were having different, and some used to have from October to September. So it was always the choice of the company to maintain it. Whereas when it comes to the income tax, you know that the assessment year is frozen. You can't have any other period than April to March. But in the accounting, the financial year, there was no consistency. So with these, through these amendments and through this new act, they brought in some kind of consistency. Now they say, once you are a company or body corporate, your financial year can't be anything else other than 31st March. So you have to close by 31st March. And that is uniform. So now we do have uniform accounting year and uniform assessment year, both from income tax and company set perspective. Now when you say 31st March of every year, what if my company is incorporated after first day of January? Then still 31st March only, but instead of that year, I will be closing it by following year. Now look at the example here. If the company is incorporated on 15th June, then it is 31st March of this particular year. That is 20, since it is the June 1920. 20 would become the year. What if the company is incorporated on 31st December? Still, my financial year will end with 31st March 2020. Look at here. This is started in June. This is started in December. There is almost a gap of 6 months. But both the companies are closing their financial year almost at the same time. Now look at it here. This company has been incorporated on 1st January. If you look at between them, there is just one day, 31st December, and next day happens to be 1st January. But look at my financial year. Now, because it is incorporated, this is what we are talking about. If the company is incorporated, mind you here, on or after. So even if it is exactly on 1st January, then what is my financial year? It is going to be 31st March of the following year. That is the next year. So it would become 31st March 21. And what if I'm incorporated on 1st March of 2020, even then again, this is going to be the same. It will not get altered. So that is what he is trying to talk about. So to sum it up, what do I mean by financial year? For a company or a body corporate, period ending 31st March. And if the company is incorporated on or after first day of January, then the financial year would be the closure of the period ending 31st March of the following year. Then comes this question. Now take 1 star to it or take 3 stars to it. That is, there is a company, either it is a holding, subsidiary or associate of a company which is outside India, and for their consolidation purpose, now they want to have an accounting year which is different than this 31st March. Then can they have different financial year? So in such a case, they have to make an application to the tribunal, and once they make the application to the tribunal, and they will evaluate, now is it necessary for the purpose of consolidation and the controls. Now if they are satisfied, they may allow, so not mandatory that they should allow, they may allow any period as its financial year, depending on what is that you are requesting. Are you requesting for July to June or October to September? Whatever it is, they may allow you, even if it is not going to be a year. So even if it is like 14 months, 15 months, they can allow it. So this is for holding, subsidiary or associate of companies of outside India. So that is when this requirement would come. To make you understand that, look at this question. SKP Limited, registered in India, a wholly owned subsidiary of Harry Limited, decided to follow a different financial year for consolidation of its accounts outside India. So, it is a subsidiary of a company which is outside India, And the purpose why they are asking is it is going to help them for consolidation. Now, the ask here is state the procedures to be followed in this regard. What they have to do, they have to make an application to the tribunal by giving the need for or justifying the request. If the tribunal is satisfied, then they may allow this company to have any period other than this 31st March as their financial year. So that is what we are talking about. Now, before I move forward, let's spend quick 5 minutes and try to recapitulate. What are the three things a company has to maintain? Books of accounts, books or papers, and financial statements. Now, I will ask questions randomly. How long I have to maintain? Now, you have to maintain for 8 years. Now, is that 8 years minimum or maximum? Minimum. Then what if I am not even having 8 years after my income, but that is my age itself is less than 8 years? Then you must maintain for all such years. Now, can I keep it for more than 8 years? The answer is yes. But do I have to keep it for more than 8 years as a mandatory one? Yes, only if the central government has ordered for it. Then the next question, where should I keep? Now you have to maintain at registered office. You want to keep it at any other place? Then you need to have board resolution, and such board resolution you have to file it with the ROC. Then you can keep your books of accounts at any other place. But as I alerted, the provisions of this are different from keeping your registers itself other than registered office. You want to keep your registers, including members register, outside your registered office. It is permitted provided two conditions. Not less than 1/10 of the total members must be residing in that area, plus the members must agree with the special resolution. So again, I request you kindly have a look at it. What is he asking? Is he talking about books of accounts, or is he talking about shareholders register, members register? Now, can I keep it online? Can I keep it my books of account electronic mode? The answer is yes, provided you satisfy certain things. And the most important one is the backup of it must be available in the server, which is physically located in India. That is the most important point from your examination perspective. Remaining are also important from practical perspective, but for you as a student, this keeping the servers physically in India is what he is asking you. Now, whenever I am maintaining these books of accounts, what are all the two principles that I need to consider for it? One is your accrual system, and second one is double entry. So these are the points that we have covered thus far. Now, we are moving further to what do we mean by Schedule 3. Now, because why I have to talk about Schedule 3, that is what we said. Whenever you are preparing your financial statements, the financial statements shall be in the form as per Schedule 3. So the format of my financial statements are talked about in Schedule 3. Then what is the Schedule 3 and what are all its contents? See, there are three divisions in it: Division 1, Division 2, and Division 3. Of course, Division 3 is not included in your material. Even the latest material doesn't talk about it. So, to give you a gist of it, Division 1 deals with the format of financials for regular accounting standards. And Division 2 talks about format of financials for Ind AS. And Division 3 talks about NBFCs. But this he is not asking you. But as a back-end knowledge, just keep this point. Division 3 of Schedule 3 deals with the format of financials for NBFCs. Then comes this question. What do you mean by true and fair view? But why are we talking about true and fair view? Here, when we are talking about the first point, we said the way I am maintaining books of accounts and all this, they must represent true and fair view. Now, how do I conclude that my books are true and fair? That is where he is saying, to say that your books are representing true and fair view, it must comply with two things. One is, you must comply with your accounting standards, and second one, the format must be in Schedule 3. So, accounting standards and Schedule 3 both are to be satisfied, then you can call those accounts as representing true and fair view. So, putting it in a different way, to say that the financials represent true and fair view, they must comply with two things: accounting standards and Schedule 3. Then, is the Schedule 3 applicable for all companies? No, it is applicable for all companies, but there are exceptions too. What are those exceptions? Insurance, banking, and electricity companies, and this wherever there are companies which are specified or in under act governing such company, where there are specific acts governing them. Why Schedule 3 is not applicable to them? The regulatory authorities have specified their own format. So therefore, they won't follow Schedule 3. They will follow their own format. Like insurance companies will follow Insurance Act and IRDA Act, and banking companies will follow Banking Regulation Act. So each of them, they have their own act. Electricity companies will follow Electricity Act. So you can't say because they are not following Schedule 3, these companies are not representing true. They do represent. So coming back to it, when can I say my accounts are representing true and fair view? Two conditions. They must comply with the accounting standards and they must comply with the Schedule 3. And these are the exceptions. Now, let us talk about this consolidation of financial statements. There is a small point here, laying these accounts in the AGM. We will discuss it separately. Now, consolidation, in the interest of time, let us look at the summary. That's all from examination perspective. Now, for whom this CFS is applicable? It is applicable for every company, mind you, every company whichever is having one or more subsidiaries, including associates. So, whoever is having any of this, for all of them it is mandatory. Then, who has to prepare this CFS? Who is responsible for preparing consolidated financials? It is the holding company. They are the ones who are supposed to prepare it. Then, what form the accounts must be maintained? It is the same format, whatever is applicable to the holding company, same, because since holding company is liable for identifying the subsidiaries, which we call it components, the other way around, more technical name components, they are the ones who is responsible for identifying components and compiling this consolidated financial statement. So the format of this shall also be the format in which the holding company is bound to comply with. Then, where do they adopt this consolidated finance? Normally, the accounts are supposed to be adopted in the AGM, but these accounts, these are consolidated. So, several companies' transactions have been included here. Then, which company AGM this will be presented? This will be adopted in the AGM of the holding company. Then, are there any exceptions to CFS? Among all this point may be important for you. Are there any exemptions? The answer is yes. If all these three conditions are satisfied, all conditions. Now, if all three conditions are satisfied, then you need not prepare CFS despite having subsidiary. Then what are all the three conditions? Point 1, other members, mind you, other members do not object to the company for not presenting the consolidated. You have not prepared, but the other members are okay with that. They don't have a problem with that. Second one, you are neither listed nor in the process of listing. And the third one, your ultimate holding company or intermediate holding company, they've already prepared a consolidated financials and they've filed it with the ROC. So therefore, you don't have to do it because your ultimate holding company or your intermediate holding company has filed for it. So to sum it up, who don't have to comply with CFS? This company which satisfies these three conditions need not prepare this CFS. Otherwise, it is mandatory. What are all that conditions? First, all other members do not object to the company not preparing it. It is neither a listed nor in the process of listing. And the third one, the ultimate holding company or the intermediate holding company has already prepared the consolidated and they have filed with the ROC. If all conditions are satisfied, then CFS is not applicable. I repeat it one more time. Now, consolidated for whom it is applicable? Every company having one or more subsidiaries, including associate companies. Who is responsible for all this? Holding company is responsible. Which format they are supposed to use? Same format as the holding company. Then which AGM they are going to adopt? It all will be adopted in the holding company's AGM. Indirectly, holding company has members have to agree to the correctness of this. They have to adopt this financials. Are there any exceptions? Yes, these three are the conditions which are exceptions to them. And if you satisfy, then you need not. Then from examination perspective, take 3 stars to this. See, here if you look at it, what is the logic? The flow of the logic. First he said, the books of accounts and books or papers and financial statements, the way you are maintaining must represent true and fair view. Then comes the question, what do I mean by true and fair view? Two things. First, it must satisfy with Schedule 3 and then it must satisfy the compliances of accounting standard. What is Schedule 3? That is what he said. There are 3 divisions in the Schedule 3. Depending on what is the type of your company and what is your nature of company, you have to follow the format. Schedule 3 provides the basic formats in which the financials are to be presented. Then which one I have to follow? Depending on it, whether you are following regular accounting standards or IndAS or you are an NBFC, you would be choosing division 1, 2, 3 for your compliance. Then what about accounting standards? Now, accounting standards, as we learned as a basic point, they are all mandatory for us to. Let us look at the summary. It is mandatory for every company to comply with the accounting standards. What if I am not complying? So, if I am not able to comply for any practical reasons, then what the company must do? So, the company must disclose. Say for some reason they couldn't comply with accounting standards, then what the company? They should disclose 3 things: statement of deviation and reason for deviation and the financial effect of deviation. So these 3 must be disclosed in the financial statements in case the company has not complied with accounting standard. Then finally 127. What are all the penalties for non-compliance of all this? Now, while talking about penal provisions, we have to talk about how much is the penalty and who will have to pay the penalty, on whom it is levied. That is what we are learning here. Who are all the persons who would become liable for this and what is the penalty? What is the penalty? Simple: imprisonment up to 1 year or this 50,000 to 5 lakh rupees or both. It is the choice of the tribunal, or it is the choice of the whoever is dealing with this case. It is their choice of imprisonment up to 1 year, 50,000 to 5 lakh rupees is the penalty. Who will have to pay for this? The persons who are responsible for maintaining books of accounts: MD, whole-time director in charge of finance, CFO, any other person charged with the board of directors. But if none of them are there in a company, in the absence of any of the officers above mentioned, then all directors would become liable. So there is no CFO, there is no whole-time director finance, or there is no managing director, then all directors would become responsible. So this point will come in only in the absence of any of the above. Otherwise, it will not come. So these are the people who would become responsible and these are the penalties. So with this accounting standards and its compliance comes to an end. That is what is talked about. Now, as a next step, we will cover these 2 points and then we will take the overall summary of what we have discussed and then conclude this part of the session. Now, this is the most important one. The reason being, this is an amendment. So 129A. So what does it talk about? It says periodical financial results. That is the heading of this section. What does it talk about? It says the central government, mind you, not the ROC, the central government may require any class of unlisted companies. So this is applicable for unlisted companies. See, the background first I will tell you, then come to it. If we talk about listed entities, now the SEBI has already mandated that once you are a listed entity, you are supposed to prepare the quarterly financials, which are subject to your limited reviews. But such kind of preparing the interim financial statements is not mandatory for unlisted. So unlisted, as of now, they were preparing only once a year. So there is no concept of preparing periodical financial statements. That is where this 129A has been brought in, making this in line with the listed entities. Now, what are this? Again, I repeat, from examination perspective, this is important. This is the latest amendment. Now, what does it say? It says the central government may order you. So they may order any class or classes of unlisted companies. Mind you, it is applicable for unlisted. Then for what? For preparing the financial statements at such periodical basis and in such form. So it is whenever they order, it can be a quarterly, it can be half yearly, it's all up to the central government. So whenever they order you, you must prepare the financials for that period. And whatever the financials you are preparing, you must obtain the approval of the board of directors, plus you have to get it done a complete audit or a limited review of these financials as may be prescribed in the manner, then who will have to do it and what is the time limits and all that. And whatever the financials that you have prepared and approved and audited, you have to file with the ROC. So this talks about preparation, this talks about preparation, and this talks about approval and audit, and this talks about filing with ROC. Filing with the ROC. So three things. But for whom it is applicable? For unlisted companies. Who can pass this order? Central government can pass this order. What are the three things? They may ask you to prepare in such form and in such basis. Then whatever you are preparing, you have to approve. It has to be approved by the board of directors and also have to be subjected to this complete audit or a limited review, whatever the order central government is going to pass. And then whatever these audited ones, either a complete audit or a limited review, you have to file such copies with the ROC. So these are the three requirements that would come in. Now look at the question which I had asked for May 2022, 4 marks. Let us look at it. This XYZ Limited received a communication from the central government. Now, where from they have received? It is from the central government. For what? For preparation of periodical financial results and complete audit or a limited review of it. They want you to get it done. Now, the board of directors have raised an objection on the ground that it is an unlisted company. So, therefore, this periodical financials and all are not applicable. That was a thing of past. But now, after this 129A coming into picture, even though you are unlisted, the central government can order. What are all the three things they can order you? They can ask you to prepare at such periodical intervals, and not only that you are preparing, you have to get it approved by the board of directors and subject to the audits, either a complete audit or a limited review. And whatever that audited accounts or reviewed accounts, you have to file with the ROC. What is the time limit for it? This filing, he has given the time limit 30 days. 30 days from when? 30 days from the completion of such period, whatever the relevant period, either quarterly or half yearly, whatever the central government says, that is what you have to comply with. So this talks about 129A. Then we will move on to reopening of accounts. Now, before I proceed with this, since this is a lengthy chapter and there are many sensitive points in between, let's revise one more time. Now I'll come from the beginning. I'll go to the top and come from the beginning. Now, first of all, is this chapter important? Yes, the chapter is important because the marks suggest the importance of it. So it is an important chapter. Now, maybe it was important in the past, but is it important even now? The answer is yes. Say out of all this 8 to 11, he can ask you, that is chapter 8, chapter 9, chapter 10 and 11. The weightage given is significant. 30 to 35% is what he is going to ask you. So keeping that importance of it, we started focusing little more on it. The point one, what are all the three things the company should maintain? So books of account, books and papers, and financial statements. Now, what do you mean by books of accounts? Books of account definition includes for all sums of money received and expended, sales and purchases, assets and liabilities, and cost records. Books and papers, or books or papers, and or doesn't make much difference. It can be interchanged. It will talk about all the backup supporting documents, your deeds, vouchers, writings, documents, and the copies of minutes, etc. Then what do you mean by financial statements? Financial statements, which is defined in 129, talks of four things. One is balance sheet, P&L account or income and expenditure, then cash flows, then statement of equity, then notes forming part of accounts. These five are included in the definition of financial statements. Then comes the question, who will have to maintain all these three? Every company. Now what is the frequency? Every year. Every company, every year they have to maintain it. Now where should I keep all this? I'm maintaining, but where should I keep all this? You must keep it at your registered office. Then can I keep it at any place other than registered office? Yes, provided you have the board approval, board resolution, plus you are filing copy with the ROC. Then how long I have to maintain? You have to maintain for 8 years. All this you have to maintain for 8 years. Where should I maintain? Registered office. How long I should maintain? 8 years. Now in these 8 years, who is going to come for inspection? Any director can come for inspection. Any agent can come for inspection. But apart from they inspecting, can they even ask for financial information? The answer is yes. Directors can ask. But agent, of course, being a third party, he don't have the right to seek financial information, but he too can ask for, he too can inspect this books of account. Now the important one is subsidiary. Can a director of holding company verify the books of the subsidiary where he is not a director? Yes, he can do it provided he has the approval of the other board of directors. Then apart from all this, in between we had a couple of points. What are the two principles the company should keep in mind while preparing books of accounts? Two things. One is accrual basis of accounting and double entry system. Then, how should I maintain my books of accounts? The way you are maintaining the books of accounts must represent true and fair view. That is what will result in next discussion. What do we mean by true and fair view? Now, when I say true and fair view, it talks of two things. One is accounting standards, second one is Schedule 3. What is the Schedule 3? Schedule 3 basically talks of the formats of financials. Now, what format are they talking about? That depends on the division, what is applicable to you. If you are normal, if you are complying with the regular accounting standards, then division 1. If you are following Indian accounting, IndAS, then division 2. Or if you are an NBFC, division 3. So this is what the Schedule 3 talks about, and the format the company is preparing the financials must be in this format. What if they are not? Then you can't say that accounts are representing true and fair view. Then will every company prepare their balance sheet and P&L account in Schedule 3 format? No. So then who will not prepare? What are the exceptions? That is where he has given. Whatever we are talking about, these Schedule 3 requirements are not applicable to these companies. Insurance, banking, and electricity companies, or any other companies governed by special acts. So for them, these provisions are not applicable, and as long as they are preparing the financials as per their own laws and regulations, auditor cannot conclude them not to be representing true and fair view. Now, then CFS. Instead of all that lengthy theory, we have discussed it in a simple way. For whom it is applicable? Every company whichever is having one or more subsidiaries, including associates. Who has to identify these components and who is responsible for preparation? It is the holding company responsibility. Now, where are they going to get it adopted? It will get adopted in the holding company of the AGM of the holding company. Then, which form they are supposed to keep? Maintain the CFS, the same form that is applicable to this holding company. So this is the summary of all this that we have talked about it. And then what if this second point of it, Schedule 3 is fine, then what if I'm not able to comply with my accounting standard? Then in your financials, you have to disclose three things. The fact that is the fact of deviation. So you have to mention a statement that you have deviated from the compliance of a particular standard by disclosing what is the number of it. Then reason, why did you deviate? And third one, what is the effect of such deviation, so that reader will have a complete knowledge of it. Then what happens if the company has not complied with any of these sections? Then there is a penalty. What is the penalty? 1 year imprisonment or 50,000 to 5 lakh of the fine amount, or both. Who are levied? The same people who are responsible for books of account, that is MD, whole-time director of finance, CFO, or any other person charged by the board, where the board has delegated. What if any of these officers are not there? Then all directors would become liable for this punishments. So that is what is the points that we have discussed. And the last ever point that we discussed is the new section 129A, which deals with the periodical financial statements. As a summary, to whom it applies? It applies to all unlisted companies. Now, who can order to maintain? It is the central government. Now, what they can order? They can ask you to prepare the accounts at such frequent intervals, whatever the government, central government finds fit, and whatever the accounts that you are preparing, you have to get it approved by the board of directors, and it must also be subject to your complete audit and limited reviews of it. And whatever it is, you are getting it audited or reviewed and got it approved by the board of directors, you must file one copy with the ROC. What are the timelines given to them? 30 days is the timelines that are given to them. So with this, we conclude our first segment of this lengthy chapter, which is accounts of companies. Then we will move on with this revision of accounts, so which is also called reopening of accounts. Can I reopen the accounts? So that discussion along with NFRA and CSR and all would jump into my second segment. So let's take a small break here as a conclusion of this first segment of it, and post the break we will continue with our second segment of it. Thank you.